NYMEX had Brent at 63 is at the highest point of 2015. So as if domestic cues are not enough, we are having global cues which are slightly troubling. The reason why one would buy India is now kind of getting diluted, but more important than anything else, I think, would be earnings. Yes. My sense is that the profit-taking, what Anuj calls profit-taking, and perhaps now is selling, is because the earnings season was always expected to be a little under the weather. The big point TCS is indicating that even the big guys, after preparing the market for a downtick, have kind of disappointed with their numbers. And I think the last straw for me is Sakti Siva, a person who has been the Credit Suisse analyst, who has been very positive, now saying that the improvement of the return on equity, the bottoming out and improvement, looks delayed for India. So she is trimming her overweight position to some extent. She stays overweight, but she's trimming that position. So for me, I guess the combination of news is making for perhaps lower lows.
Oh yes, Latha, morning. Hi Anuj, morning. I take your point on TCS. I think that will be the stock to watch today, because this will be the third quarter of disappointment, or rather underperforming what the expectations are in TCS's revenues. And one thing is for sure, the outperformance that we've seen relative to the industry for so many years may now be a thing of the past, because as someone was indicating...
Would it be a lower outperformance, or are people telling you that it will be actually market performance?
Well, actually, I was speaking to a couple of people who heard out the management yesterday, and they said that for the first time the management has put forth the key weak areas, whether it's telecom, whether it's energy, whether it's Diligenta. For the first time they're stating that these are areas that are seeing some pressure pockets. Of course, these areas contribute just about 10 to 15% of the overall business, but it's still some statements coming out from the management which confirm that things could perhaps get worse. Also, the attrition, I was going through a report which suggested that the quarterly annualized attrition at close to 17% is the highest in the last 15 quarters. So from here on, it seems like, at least in the near term, there are no incremental margin levers.
Yeah, the attrition was high, and in the press conference, Ajoy was mentioning that they're going to take steps. I think 14.9 for the last quarter. So yeah, higher than they have ever had. But Anuj, I'm really wanting to know how the technicals of the market are placed. 2 days of fall of near 1%.
Yeah, so before that, Latha, good morning. I think let's first discuss the earnings bit, because that's more important. And I think yesterday was an important day, because yesterday the market didn't really react to IndusInd's numbers positively. In fact, the market sold off.
The moment the numbers came, there was an uptick, and then it sold off completely.
So the stock actually sold off. So the issue here is that we're talking about a company where where it came out with better than expectation numbers, and still the stock actually fell.
All round excellent numbers.
Yeah. So a market which is actually looking at good news to sell is a market which is weak, which is something that we saw last time as well. Last time, what was the problem for the market? The market was selling off on every good news. It started with the rate cut from the RBI. After that, the insurance bill, a couple of other things we saw. So that, I think yesterday, that was the big major event that took place, and the market also declined, though it tried to recover in the last hour of trade. So you have one stock where the expectations were met, or maybe even better, and still the stock fell. Now you have a TCS which is actually disappointed all around, and even though the market has gone into the stock or the results with muted positions or muted expectations, I would still believe that there will be quite a bit of decline that you will see on TCS today. And what's the problem with that is that not only will it take TCS down, it will take Infosys down as well, and the entire IT sector down as well. And IT and banks are the two major components of this market. They make 50% of the index. IT and financials make 50% of your Nifty. And that's the problem of an index being so skewed towards two sectors. And both these sectors now clearly are in a bit of a problem spot. The other point is that has the trend for this market now again changed to sell on rally. You saw for 2 days back, the intraday decline that you had, that was disturbing, and yesterday's follow-up was even more disturbing. FI has sold about 200 crores, but DI has bought about 400 crores. That's, I think, a big positive, because from medium-term point of view, it's the DIs that normally get the sense of the market right. The F&O data is very interesting and very puzzling. Look what's happening in the F&O market. They sold 1,000 crores in index futures, but they bought 2,500 crores of index call options. Why would that happen? Index futures, you sell index futures if you are largely of the view that the market will fall, but at the same time you want to hedge that position by buying calls just in case your call goes wrong.
Which calls?
The 8500 call is something that you saw a lot of open interest build up at it. So 8700 call as well saw quite a bit of build up. In fact, 12 lakh shares were added at 8700 call, which is where we are right now. So you sell index futures, but at the same time to hedge your positions, you also buy index call options. That is what you saw. I think what's that telling you is that till expiry, the Nifty is going to make a 300-400 point kind of move. It could well make a big short covering move back to 9,000. Or it could, again gravitate lower towards 8,400 or so. The next support for the Nifty is 8550. That's the 100-day moving average. And this market is fine as long as it's not made a lower low. The recent low was 8260 or 8250 thereabouts. As long as the Nifty holds that, the traders would be happy. But if it falls below that, that would be extremely negative. And one more thing, the Bank Nifty now is clearly in a bit of a bear market. If you see the Bank Nifty's 3-month chart, you will see that it's been making lower lows and lower highs. In fact, if this time it's peaked out and it goes below say 17,800, the recent lows, then you would know that this really is in a problem spot. But today it could be all about IT stocks leading the market down, and let's see, if there's any kind of support at 8,600 or so.